Yeah, I think, I mean, you dig through you get into the weeds of these numbers. The numbers actually don't look too bad, but I think when you look at the kind of slight miss on subscriber ads, a slight miss on March guidance, taking away yearly guidance, which is something investors were really looking forward to because they were really wanting a 2022 number better than 21. And so by taking that away, there's some uncertainty there. And then you kind of layer on top of what you talked about in an earlier segment, actually, when you think about Netflix, like anything that's consumer facing in entertainment, engagement is really on top of mind. And so if you're not beating those engagement numbers, investors are running away. And so I think that's what's really ultimately hurting the stock tonight.
Do we know why the engagement numbers are coming down? Is it just because during the pandemic they boomed and now it's a give back?
Well, I think that's what everyone's trying to figure out, right? Because, the thought process going into this year, whether it was Netflix, Spotify, and many others, was that, as you got into 2022, we're going to get back to normal, and we would get back to like a more normalized growth rate on subscribers and whatnot. It looks like, based on everybody's guidance so far, that that's just not the case. So is it a COVID hangover? Have we reached kind of saturation? I think those are all kind of the questions investors are asking. And for now, these stocks are all getting punished.
Do you look a lot at where they're trading and relative to recent lows? Our last analyst talking about Facebook mentioned the term air pocket, but beneath, and clearly where it's trading now is below its recent lows. Is that a concern?
It's something that we normally look at, but when you have a potential significant narrative change, so if the narrative now is, well, this is just slower growth and the inflection point in cash flows is going to be longer and maybe our TAM isn't quite as big, that's a significant narrative change to where the way we're valuing this the last 2 or 3 years may not matter anymore. I think getting a quarter or two of digestion, or as the previous guest talked about, an air pocket, getting through that air pocket and time to really assess what's the underlying issue here will go a long way in determining what the ultimate valuation is. But for now, no, I absolutely agree. I think we're in a bit of an air pocket here until we can sort some of these issues.
The Joe Rogan scandal, could it be ultimately, can it turn into be material for this company, its numbers and its growth?
Up to this point, no, I don't think so. For us, it looks a lot like the Dave Chappelle issue for Netflix last quarter, where it was just going to be a short-term noisemaker. Based on some of the social media trends that we follow, the Joe Rogan is not quite getting as much traction as probably some of the naysayers would like for it to get. It seems like just not enough people care enough whether or not what he says has any meaning. So for now, we don't think so. But again, I mean, any reason not to subscribe or engage is going to hurt these companies. And so it's definitely something that's in the back of our minds. But for now, we don't think that is the primary impact here.
Because the musicians that are boycotting because of him will stop doing so soon enough, or because, if necessary, Spotify can just remove Joe Rogan?
Well, no offense to any of the musicians that have boycotted. No single musician, no group of musicians, drive that much engagement on Spotify. Typically dozens of musicians, typically the ones that are in the Billboard 100, the Billboard 50, that are the reason people sign up. And so far, we haven't seen any significant boycotts in that space. So, no single musician really makes a difference on a platform as big as Spotify.
You still have a $358 price target? We're a long ways from there.
Well, it's one of those things where when the way we try our best as a sell-side analyst to try to take a fundamental long-term view. And if you look at what Spotify is really trying to do, is they're trying to be a platform for musicians, for podcasters, not just for professionals, but for the creator economy. And we think that there's a big opportunity over the next 5 to 10 years to continue to grow subs, continue to expand the kind of pricing tiers you have, monetize fandom, and really be that conduit between fans and creators. And if you think about it that way, it should command a fairly healthy multiple. It should be able to get gross margin expansion, but it will take a lot of time to figure that out. And right now, as we've seen in the market over the last, call it 2-3 months, everyone is hyper focused on the very near term of the impacts of what's happening on the macro side, and specifically to media, what's happening with engagement.